Coronavirus, how scared should we be? Can we stamp out stamping fees? Most of you wouldn't understand that, but we'll explain it. And is Telstra screwing small business? I'm Peter Switzer.
I'm Paul Rickard.
And
we're mad about money.
Well, Paul, I gotta admit, I was a bit scared about the coronavirus because it kind of looks a bit like SARS. But the Americans today, they get up and they buy the stock market. Like, why aren't they as scared as me?
Well, Peter, I think they're still a little bit scared, and we've seen, look at US bond rates. US bond rates down about 1.63%. We had a huge drop in Australian bond rates yesterday as well. That tells you people are scared. There is a risk-off trade occurring at the moment. But look, what happens? Big drop one day, we get a half retracement the next day. Chances are this thing's not over. I'm a little bit scared about coronavirus.
Why? Why are you scared?
Well,
You're scared of nothing.
Well, I am. I am scared of nothing. But I think, China is number one or number two economy, and it's going to have an impact.
Yeah.
And so it's going to be, global growth is going to be slower this year as a result. And the question is it all over or does it continue? And that question is still unknown at this point in time.
Is it a black swan coming in to really
remember
crush
the market's
market?
had a fantastic run up in both the US and Australia and most Western markets. It is time for a pullback. Pullbacks usually can't be explained. That's why they happen, because we explain them afterwards.
Well, it's just scaredy cats selling their stocks.
Yeah, well, it's a bit of profit taking. So I don't think this is a market to rush into. I think coronavirus is perhaps just that little.
Yeah.
I won't say it's a black swan, Peter, but it's a negative just to give the markets, put them on edge. So we're not out of the woods here on this one yet.
Yeah, I think the only optimistic line I would say is that I think the Chinese learnt from SARS. I think they'll probably handle it better. It's a more affluent economy. It might be better. But as far as I'm concerned, I don't invest when I don't know what's going on. And at the moment, I don't know what's going on.
So some of the retailers, Woolworths was also stronger. So it wasn't across the market.
No.
Big drops were in the commodity stocks because they're most exposed to a slowdown in China, plus all the travel stocks. So just be a little bit careful in this market. We had a good run. I think it's just looking, probably a time just to be a little bit on the quiet side, I reckon.
Okay, let's go to stamping fees. No one understands that. And
they're called stamping fees, Peter, because this is what stockbrokers and financial planners get when they assist you, in inverted commas, into an investment, such as an IPO, but also an investment in some of the listed investment companies, listed trusts, and also things like hybrid securities.
So you're my client. I put you into this new fund. As a consequence, the fund manager
pays you 1 or 1.5%. Called a stamping fee because in the old day it was all paper based. It's interesting, Peter. I know we've got short on time. We had paper based applications, and each broker had a particular stamp, and you put your stamp on. And when all the paper applications got processed, they looked at the stamps and said, "Okay, this broker gets X." This broker got Y. That's why they're called stamping fees. So if you don't know what a stamp is,
cash for comment.
Well, it is a bit like cash for comment. It's been in the industry for decades. It was mainly to deal with things like IPOs, but obviously we've had the issue where, as listed investment trusts and listed investment companies have become more popular, a lot of credit funds, it's a big source of revenue to lots of financial planners. Not all. Our business doesn't take it, but lots of financial planners
and some people
brokers
might rebate them.
And some people do rebate them, so they get the stamping fee and give the whole effectively commission. It's a commission by any other word back to the client. Now, obviously, it's not huge, 1 to 1.5%, but it's a big source of income. And, it's why we've seen big churn. We get listed investment companies and trusts come out. Financial planners pour their clients into some of them. A couple of months later, another trust comes, some of them get out, money gets churned. So there are arguments to and from, but I think this is something, if we don't want commissions, this should have gone a long time ago.
So you think the Treasurer will say, thumbs down?
I think it's inevitable this will go. Now, where he draws the line, because is there still some fee paid for things like IPOs, for new shares?
See, brokers might get away, but not financial planners.
I don't think financial planners who are charging a fee is in any way conscionable to take this. So if your financial planner is suggesting you look at this hybrid security or this listed trust or this listed investment company, ask them, are they getting a fee? And if so, say, I want it.
Yeah, fair enough. Now, finally, this Telstra story, I missed it, Paul. You're saying that they're being a little hard on their contract.
A little hard on their contract. There's a story in the Australian today about Telstra extending the terms of trade for its suppliers.
Now, does that mean they'll pay late?
That means they'll pay late. Now, I reckon this is really bad form, right? I reckon this is, I won't say it's unconscionable, but I think any big company, Rio's also been fingered in the same stuff. just to improve their cash flow. I mean, I think it's crazy why people need 60, 90, 120 days notice.
The government and Labor will crack down on this.
And they need to. And of course, the quid pro quo here, Peter, is we'll pay you later, but if you want a little bit sooner, maybe you'll take a bit of a discount of what you're charging us. And this is where it does get borders into that slightly unconscionable.
So Telstra's getting into factoring,
It's called reverse factoring here, Peter, and it's an industry that's growing. I reckon it's time for small business, it's time for shareholders to stand up and say, we've bashed the banks up for what we call bad conduct. Yeah. We need better conduct from all corporate Australians. If your company, Telstra or Rio, is engaging in this sort of conduct, as shareholders, we need to say no.
Yeah.
And tell them to behave. I mean, this is really bad stuff. Right?
I'm going to say, that was such a good finish. I'm not even going to top that. That is terrific. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.